Well, thank you for having me. Yeah, as you said, subscriptions is a part of the economy that's booming. In particular, over the course of COVID and what's happened afterwards, we've seen a big increase in subscriptions. I think there's various stats out in the market, but it's about 30 to 40% increase in the number of subscriptions that people have out there since pre-COVID versus post-COVID. And as you can imagine, the way that payments for subscriptions work is quite different from one-off transactions, and that's something that we've always been very much focused on from the very beginning of GoCardless. And a big part of our proposition is about connecting people's bank accounts more directly to the merchant and enabling them to pay more easily and more directly from their bank account. And one of the big reasons why that is a big benefit is because bank payments are a lot more reliable. So if you think about a card on file, you'll typically see somewhere between 10 to 15% failure rate on a recurring transaction. That's a big deal, right? That means that every month, 1 in 10, maybe even 1 in 8, 1 in 6 of your customers is having a payment issue. And that actually is one of the biggest causes of churn for subscription businesses is payment failure. And so it's not, that the customer doesn't want the service anymore. It's not that they're not happy with the service. It's just that the payment has failed and then they don't get around to fixing it. And so being able to reduce that significantly, with direct debit through our platform, we see failure rates of around 2 to 3%, so almost an order of magnitude lower. You're able to retain your customers much better, and that's a really big part of the reason why our customers work with us. Open banking's been something that people have been talking about for a very long time now. I remember when we first started GoCardless 13 years ago. I think that the phrase open banking was just being coined, and at that point it was just a concept. What's been really exciting is to see how that's turned from a concept into a reality over the last sort of decade or so, and in particular over the last few years we've seen increasing levels of adoption, but more importantly increasing levels of maturity in terms of open banking technologies around the world. And the reason why we're really excited about open banking is that it actually is opening up people's financial lives and enabling them to connect their financial lives to the internet in a seamless and secure way for the very first time. And from a payment perspective, what is really exciting about that is that it offers a really great user experience for authenticating transactions in a far more secure way than anything else that's been available up until this point. And you can use that to improve the subscription type payments that we were just talking about, but it also enables you to use bank payments for a much wider variety of use cases, such as like e-commerce and one-off transactions and other kind of use cases as well. So it's still early. If you think about the adoption of open banking, it's growing very fast, but it's from a low base, and we know that these things take time. But one of the things that we've been doing is weaving open banking into a lot of the offering that we have. So combining it with direct debit to improve recurring payment transactions, leveraging the data capabilities to enable higher levels of security around transactions, but also to enable businesses to make better decisions using the financial data of their customers. So there's all sorts of use cases for open banking, not just payments. We're really, really excited about it. Well, I think it really comes down to, one of the reasons we started GoCardless in the first place was that, when we first started, I was 23, I was a couple of years out of university. I certainly didn't know anything about payments, and neither did my co-founders, right? We were all very young. And when we started to learn about how payments worked, we were trying to solve a payments problem for a different idea that we were working on. We were really surprised by how complicated it was and how few options there were. And when you think about card payments, which is the way that most kind of retail transactions happen, and most e-commerce transactions happen even today, there are a lot of intermediaries in between every transaction, right? You have 4, 5, maybe even 6 intermediaries. If you think about the issuers, the acquirers, the networks, Apple Pay, all these gateways, everything else in between. And all of these parties, they take a cut of the transaction. And, I think the thing that just really struck us was like, in a world where the internet exists, if you designed a payment system, why would it look so complicated? Why would you have so many intermediaries? And we just felt that, okay, in a world where the internet existed, surely money should move more directly from A to B, right? And that's really what led us to looking at bank payments to solve our own problems. And then we realized there was a wider problem around bank payments, and that if we could solve that, we could have a bigger impact. And so our big belief around bank payments is that it's a much more direct mechanism, right? There's far fewer intermediaries in between each transaction, and that makes it a lot more cost effective, but it also makes it more reliable. With things like open banking, it makes it more secure. There's many benefits. And so, our belief and hypothesis is that in the long term, we think that account to account and other kind of bank payment type mechanisms are going to be the predominant way that transactions happen. They're a much more efficient way. And I think that the stat that I would just kind of point towards is, when you look at payments overall, it's about a $3 trillion market, right, in terms of revenues. And that's just direct payment revenues. So not even all of the costs around collecting payments, which often are caused by the complexity of these systems. That works out as almost a 3% tax on global GDP, right? So, in a world where the internet exists, it doesn't feel like the world should be paying 3% tax on payments. And, our view is that actually in the longer term, we should see that come down, but it needs to come down by making the payment mechanisms and the infrastructure that underpin them more efficient. And that's what we think bank payments can do. Well, B2B payments is like a big part of what we do. We serve both B2B and B2C. B2B is a very interesting area because, it's a part of payments which is probably the least disrupted over the last 20 years. If you look at the way that most bank B2B transactions are being done, it's still very manual mechanisms, right? It's people going and receiving invoices, having to then transfer bank payments, or in some countries, like, even in the US, like, in a significant proportion of the time, is still paper checks, right? So this is a very, very manual way of transacting. And this was actually one of the areas that we saw very early traction was amongst SMBs that were trying to get paid from other businesses. And, they were spending significant portions of their time trying to chase for payments, right? So, here's the number of small businesses that I've spoken to where maybe there's 5 to 10 people in the whole organization, and they have a whole person spending almost half of their time just chasing their customers to get paid. And not only is that a big administrative burden, but also it means that they're not getting paid on time, right? The late payments is one of the biggest causes of death for small businesses, right? It's a really big challenge around managing cash flow. And so getting paid on time is a really important factor. And one of the ways that we've been able to solve that problem is by flipping the transaction on its head, right? Rather than someone sending an invoice and then waiting for their customer to pay them, you're able to set up an authorization to pull money as per the invoice terms automatically from the customer's account. And so that changes the dynamic. All of a sudden, rather than waiting for your customer to manually pay you, you're able to initiate the transaction, you're able to get paid on time, and then it becomes more about managing the exceptions, right? And the exceptions are a much lower proportion of the overall transactions that you process. And so that enables a lot of these businesses to massively optimize how quickly they get paid, but also reduce the amount of admin that they're having to incur to actually get paid in the first place. And obviously we work with a lot of small businesses. We also work with bigger organizations as well. But we think that there's a big opportunity to innovate around B2B transactions. And we think this is an area that will see big growth over the next few years. Yeah, I mean, on the B2B side, it's very broad. We work with a huge variety of different businesses, everything from professional services like accountants or lawyers, all the way through to working with coffee bean wholesalers and other kind of wholesale kind of use cases. And what's generally common between all of the use cases we work with is that there's this ongoing relationship between the business and the customer, right? So they're collecting payments from their customer on an ongoing basis. It might be variable in terms of frequency, it might be variable in terms of amount, but is on an ongoing basis. And that's really where our solution has a very strong fit, and we're able to, as I said, flip the way that the transaction happens, enabling the merchant to take control of the payment and get paid on time with much less admin.